jobs numbers out of the US this afternoon. All eyes really focused on that at this stage, aren't they?
Correct, Stephen. We're seeing a stronger dollar overnight, and the dollar strength is still the theme of the day, with expectations of those numbers coming out better than expected, and the unemployment rate looking to come down to 9.7%.
Of course, we had the ADP numbers on Wednesday, 3 times better than expected. But if you think back to last year, we had great ADP numbers for November. December, we had the non-farm payroll numbers disappointing. So there is room for disappointment in today's number, isn't there?
Correct, Stephen. The market will be fairly happy if the numbers do come in line. We're seeing equities lower on the day on the stronger dollar, but market really looking for an improvement in the unemployment rate. That's obviously very important. There's still concern that even though we're seeing better numbers coming out, that is not really affecting the unemployment rate, and that's really where the importance lies at the moment. But we will see possibly a rebound this afternoon, depending on the size, in terms of possibly equity markets.
Ahead of that, we had retail sales out of the United States yesterday. Disappointing, rising by just 3.1%, and 3.4% was the number the market was looking for. Of course, this is being blamed, as usual, on the weather.
Correct, Stephen. We also saw German retail sales numbers also coming out lower than expected. So really, we did, however, see the numbers because of the weather, and as expected. We are seeing higher unemployment numbers, so the expectation is that we would have seen consumer spending coming out better. But the important thing is what those retail numbers are going to look like in the new year, as the weather wanes off and we see possible expenditure coming out of consumers.
Well, the year really kicks into gear next week when we have Alcoa's results coming out on Monday, the first of the big US blue chips to report back numbers. What's expected from the earnings season? This is the fourth quarter earnings season.
Even market expectations, and we were hoping to see a continuation of the last three quarters of 2010. We have seen them beating forecasts by sometimes over 75%. So market expectations are for a bumper fourth quarter, and hopefully setting the tone for the first quarter of 2011.
You mentioned some of the other economic data we've had out this week. We've had ISM numbers beating expectations at the beginning of the week in the US, also across Europe. We also had ISM services numbers on Wednesday coming in quite strong. So really this building some of the momentum for those companies operating across the US economy.
Correct, Stephen. So if we have a negative start to the reporting season, it will definitely damper equity markets and really possibly set a tone for the rest of 2011.
We were chatting about Capital Shopping Centres with CEO Dave Fischel just a short while ago. Revaluation of its bid for the Trafford Shopping Centre. This, of course, all comes as we have Simon Property Group in the United States making a hostile bid, or potentially making a hostile bid, for Capital. What's the market making of this?
The market seems to be happy with the revision. I think Capital Shopping Centres have kept to their strategy. They've settled the acquisition of Equity One in the US, and they are moving in the right direction. What's really important is the share seems to be trading at the market. Well, we will just have to see as to what the final settlement and the actual transaction going through, but it's obviously positive for the stock and the market reacting positively.
Another stock in the spotlight today, that's CFR or Richemont. This share was up 2% yesterday, so a bit of positive momentum for Richemont. Any reasons behind that?
See, we can speculate a weaker dollar is good for their transaction sales, as we estimate between 10 and 50% of their sales are exposed to the dollar and the yen, as well as we're seeing a broker upgrade coming through today, estimating that their price estimates are going to increase by 5%. We have seen very strong sales growth coming through from Richemont in 2010. It is, however, trading at close to its recent highs, so investors should be cautious at entering the stock at this level, but ultimately the market behaving strong and reacting strongly to the broker upgrade and the weaker euro.